One Step Ahead by Lundquist and Beslick.
Welcome to One Step Ahead Radio, another session, another week. As always, James Osborne will host this session with me this week. And this week we have a special guest, a very great person that I've been looking forward to talk to, and James as well. He is one of the people that I've known in this industry, I think, for about 25, almost 30 years. And he's not old. He's very, very young. And he's still kicking the area forward, I would say, in so many ways. Mike Tyrrell is here with us today. And Mike, very welcome to One Step Ahead Radio.
Thank you very much, Sasha. Thank you, James. It's great to be here. You can't say 25, 30 years and also that I'm not old. The two simply don't correlate. Yeah, I'm afraid I'm old. Young at heart, optimistic for the future, but yes, I've been around for a bit and very much so very excited to be here talking about a company to investor communications on sustainability.
And we are very pleased to have you here because this is a topic we've been sort of talking about and discussing for some time, James. And I think it's going to be interesting to hear what a professional like Mike, who's doing this for a living every day, has to say to us about this. What do you think?
Yeah, no, it's going to be a very good welcome also from my side, Mike. We've again been knocking around this space for many years, and we've in the past, a long time ago, we had you over for Lundquist events, so it's good to reconnect and to get an update on this. I think very important time at the moment. 2025 has all been about ESG and sustainable finance being down in the doldrums and being kicked around as the punch bag of the political and regulatory world. So it'd be interesting having your take of where you think it's going.
Yeah, I think the punches. I was reflecting on this. I'm writing a blog post coming out soon, and I was reflecting on this. And I think pretty much all of the punches that could be thrown, apart from possibly one, have been thrown now. So this is a very good time to be thinking about sustainability, ESG on the canvas and getting up and moving forward.
That's great. Mike, before we go into that, I mean, maybe good for the audience to know a bit about what you do, actually, because we know you, but many other people don't. So would you mind telling us a bit what your business is and what you're trying to do?
Yeah, sure. So thank you for the opportunity. So I run sriconnect.com, which is an online research and communications network that helps companies and investors and research providers communicate on sustainability issues. So there are numerous systems around the world that help companies and investors communicate on financial issues. And what I help them do is communicate on sustainability issues and the way that those interact with financial systems. We do this by running a social network, which is free to join for everybody with current professional exposure to sustainable investment. So it's only for professionals working in the space. We've got 6,000 odd users, and the types of things that happen on the platform are report distribution, research distribution, discussion, and also connection between individuals. And as we come on to discuss, as I'm sure we'll come on to discuss, the individual and the role of the individual in communications is hugely important. So that's what the day job is, running this online research network. Alongside that, I do a fair amount of work for industry bodies and professional associations and training, anything which enables me to contribute to smoother communications between companies and investors on sustainability, without causing competitive issues. Because obviously, if you run a platform, you can't serve one member against another. So anything that enables me to drive forward better practice in company investor communications is what I do.
Thanks, Mike. This is very interesting. I mean, look, on the topic of communication, this is something that has been sort of boggling me for years because, I mean, there is something that is not working. The companies are producing static reports. The investors need to have forward-looking information. They need to understand the value of what is done. What's wrong with this, Mike? I mean, you've been in this space for a long time.
Yeah, it's a good question. I mean, what's wrong with it is probably that we built it all wrong from the start.
Mm,
By which I mean we designed in developing sustainability reporting and in developing investor communications on sustainability, we built a whole new system, a whole new infrastructure, sort of alongside mainstream financial
mm,
communications. Now, there needed to be something separate, and it needed to be different because sustainability needed the oxygen to breathe away from the kind of the core process of quarterly reporting.
mm,
However, we probably didn't pay enough attention to the way way investors and companies communicated on mainstream issues. And as a result, we've developed a system that is fairly different from the way mainstream investors communicate. If I illustrate, if a company wants to communicate its mainstream investment prospects to investors, they will typically articulate an equity story. This is why you should buy our shares. They will produce reports, but they will also then take those reports, they will then summarize those reports, focus them, take them out to meet investors and research analysts one-on-one and in small groups to explain their story. Now, in sustainability, we've developed the reporting side of it, but we haven't really done all of the other bits. There are some companies, and we've done some work on which companies that produce sustainable equity stories. So equity stories that integrate sustainability with them. There are companies, lots of companies produce reports, but far too many companies produce those reports, put them on the website, go on holiday, and moan that nobody ever reads them. And there are some companies, however, and I think James has some experience of this, that go beyond the report and actively try to communicate to investors. So they target the individuals, they organize webcasts, they do roadshows, etc. That latter group of companies are communicating in the way that investors expect to be communicated with. The former group of companies, I'm afraid, do tend to get trapped in this sort of never-ending loop of regulatory expectations and data provision and essentially unread reports. Now, the two exist alongside each other, and there's absolutely no reason why a company can't move from the regulatory box-ticking space into the more holistic investor communication space. And in actual fact, that's really needed at the moment.
Yeah, Mike, this is great, and goes along the line that James and I have been discussing for some time in this context. But the thing is, what I'm trying to get my head around is this thing that basically what you're saying is that the current framework of communication used by companies is actually not conveying the message to investors in a way that investors would like to see that message in many cases. But and it's unbelievable that companies are putting so much money in these static reports that are on their webpage, and they are just not getting paid for it by the stock market.
Yes, that is. So that is. Now, there's an important caveat to that, in that you talk about investors, and we always talk about investors. But of course, the difference is the investors are not a homogeneous group, all sorts of different investors. And investors have all sorts of different reasons for needing information from companies. So the needs of a passive investor, a quants investor, a fundamental active investor in mainstream investor communications are fundamentally different, and in sustainable investor communications are fundamentally different. And I think in going straight to investors, we forget that. We therefore, and this is a sort of long-standing problem that I think regulators have bought into big style and companies have bought into. But companies produce an awful lot of comparable granular data, which would be necessary if they were sustainability data, which would be necessary if their investors were quants investors. That's the sort of information that quants investors want. But fundamental active investors don't want that. Sasha, does your fund, do you want 96 data points?
No.
Do you want the 3 or 4 data points that matter?
I wanted 3 or 2 data points that matter. I don't care about if there is 16.
So unfortunately, we've been given quite a bad steer. We've given ourselves a bad steer by just allowing investors to be characterized as a single type, which of course they aren't. Now, we did a piece of work last year for the World Business Council for Sustainable Development, and I would fully encourage either companies or investors, indeed, to go and have a look at this, which is entitled "Demystifying Investor Sustainability Information Needs." But I've always thought of it as how our investors actually use information. And in that, we dig into the different motivations of investors for wanting and needing information from companies. When you go into that, you find that the motivations that individual investors have is very different from what all investors are presented to want. So I think there has been some misalignment between what companies are producing and how they are producing it and what investors need. However, the good news is that it's very easy to get back on track.
But I just wanted to come on to this point about understanding investors, which I think is fundamental. And I agree completely with the idea that, of the fact, that it's just a very dishomogeneous group. There's lots of different types of investors. And the way that, sustainable and sustainability cuts into that is, again, complicates the picture. And I think one of the things that we've had in the last few years and the way it's formed a lot of companies' perspectives on what they think investors want is they've kind of seen their own corporate silo reflected on the investor side. So, they tell you that, we had this meeting, with a big investor and we talk, for sort of 25 minutes about the business and the returns and investment and all of this. And then at the end, there's like a 5-minute slot in which the ESG person on the investor side gets to have their questions. And they ask these very, very granular, precise data points or information about the decarbonization something that's not really been directly connected to what was said before. And that is answered by the sustainability person. So it's like this geek to geek kind of conversation that everyone else kind of rolls their eyes and say, well, okay, thanks very much for that. But we know we have to answer their questions. We know how to come to that. And so there's this sense on the company side that their role is to provide this very specific answers. And sometimes we hear that with reports, sort of report writing. So we've got to make sure that at some point we have this phrase and we have this data point because there's somebody who asks us for it, rather than thinking that it's the overall equity story and the value proposition that needs to come out to speak to, mainstream investors, not just like this sort of geeky sort of subcategory of people who are focused on ESG. I mean, does that help? Did that help, reframe the way people need to be talking and addressing, what's the whole point of what they're doing in sustainability when they talk to investors? Is that a way to frame it and to get out of this kind of closed mindset that we have at this moment?
I think it is. I think it's a way. I mean, the first thing to do, as you very effectively do, is recognize this mindset and this practice. I mean, there's a situation as you describe it absolutely happens. And we can stay in that pattern for decades. We have stayed in. But another pattern also happens, which is the more positive, which is engaging, which is breaking down the barriers between the silos in both companies and investors. And the problem is, which comes first? Is it the company's job to break down those barriers and take out a sustainable equity story? Or is it the investor's job to demand that? And unfortunately, until sort of both of them step forward, we'll be stuck in the holding pattern. And so it's neither one's responsibility or the other. Now, the only real way to do it, and this, I think, or sort of in my experience, is to feel confident that it's the right way forward. So you will, as a company, if you start taking your sustainability equity story out and you meet investors that say, oh yeah, but what about your sort of biodiversity strategy for your tiny business that nobody really cares about. You will face that. That is what the appendices of your sustainability report are for. Thank you for your question. You'll find that in Appendix Q. Okay, don't ask such an imperial question again, but that's what that's what they're there for. But you will also, as a company in that process, experience some investors that really are crossing over. You will come into some meetings with some mainstream portfolio managers, some sustainability portfolio managers, and some sustainability analysts, and they will be blended as a whole, and you will get questions from across the spectrum, and you won't really know where they're coming from. So you will get positive as well as negative. This, I think, is, I predicted that we'd come to the individual, but it is true. It is about the individual. You as a company need to think about, well, the first thing a company needs to do in trying to break down these barriers is, as I say, first of all, stop thinking about investors as a homogenous whole, and then stop thinking about investors at all. Start thinking about, well, my top 20 investors. So you don't actually care what investors think as a company. You should care what Schroders and Legal & General and Amundi and T. Rowe Price think, because they're your top investors. But then, if you were a mainstream investor, you would do this. And so as if you were looking for mainstream investors, you would do this. So as a company looking for sustainability investors, you should do this. You then look a level deeper and you say, well, actually, I'm really interested in being part of their growth fund or of their value fund, or I think I'm a really good candidate for. And that's where you start to identify, well, Jenny's the portfolio manager on the fund and Eric is the influential analyst. And actually, I don't need to be communicating to investors. I need to be communicating to Jenny and Eric, because Jenny and Eric are the people who are going to buy or sell my shares. Now, the next stage on from that is to say, well, look, Jenny and Eric like my story. Now, can they introduce, Gavin and Sasha? Can they bring them in so that another fund within that institution holds my stock? So again, it's a little bit more, when companies are communicating, they need to be taking a little bit more of an investor relations mindset and a little bit less of a kind of regulatory reporting mindset to the process.
That's absolutely very strong, very good advice. And I think it's also reflected, just the very last comment, about how much companies, sustainability professionals need to also break down the barriers in their own internal organization. They tend to be sort of siloed themselves, and above all in the current environment where, in Europe in particular, there's a lot of frustration and disengagement because of the CSRD nightmare and 10 steps forward and 18 steps back, and other management has been a bit burned on that, but the ability of sustainability professionals to reach out to the other people within their organization, above all, as you've said, in investor relations, and learn from their experience and how they operate, and learn to speak to how people speaking, but also to commercial people within the organization. How is your commercial team and sales and marketing selling what you're in the market, and how does sustainability play a role in that, rather than seeing it as just a sort of a reporting data point kind of exercise? I think that's a really enriching and important exercise. And again, it comes down to the individuals. Who do you have in the room? Who you're talking to within the, also within your own organization. I think that needs to sort of change, rather than speaking to sort of just the sort of the formal heads of sort of corporate processes. It's also this more commercial mindset that needs to sort of pervade the sustainability space as well. I know, Sasha, that's something we've talked about before. I don't know if you had any other thoughts on that.
No, I think, it's the Mike. The sort of a challenge of making investment decisions on overall communication of virtue and not really on value creation. So what I mean by that is that in very few instances, we can sort of truly get the information about how the certain product line, market segment has been affected by, improving sustainability practices or efficiency of the products and so on. So this is the space where I think it's not only about the communication with the market, but it's also about what you're actually trying to communicate. What message are you conveying? And that's something that I really sort of think about, and I don't know what your experiences are. Can you see any change on this? I mean, you're running the SRI Connect. This is a established and well-respected platform where companies meet the investors and investors meet companies. Yeah.
So I'll tell you where first of all, I agree entirely with James's point about companies needing to connect more commercially. It's not my area of expertise, so I sort of just agree and then and pass over with. And look, obviously, Sasha, you know, investors need companies to be doing that. I stick to my knitting and I focus on the communications to investors part of it. The most interesting part of the work I do, and as you'd imagine, running a network, identifying contacts, is an awful lot of just making the plumbing work. You know, It's an awful lot of times, who's the coverage analyst of this and what are they, etc. But the bit that I really enjoy is when companies say, we're going to talk to investors about sustainability. Now, we're typically to say we've done our report. I really prefer they say, before we write our report, let's come and have a chat. And a company will bring me, typically, I'll say, well, what have you got? And they'll send me a PowerPoint deck, which is essentially their sustainability report broken down into, we have 6 key stakeholders, stakeholder 1, stakeholder 2, stakeholder 3. And we spend 45 minutes on the phone, and the conversation is almost always exactly the same, in which I will say, yeah, but hang on, what do you do? What is your core business? What's the direction you're going in? They say, we've got some slides on that. I say, I know you have. You've got it in your capital markets day. Start with that. When you're talking to investors, remind them what you do, what your commercial proposition is, what your value creation story is. First 3 slides. Then, what are the 2 or 3 sustainability issues? You know, you mentioned, Safra, about, I said you want 4 or 5 data points. And you said, oh, no, please, 2 or 3. What are the 2 or 3 things that you really want investors to understand? If you're an energy business, it is your carbon transition strategy. Everything else goes in the appendix. If you are a food company, it might be your alternative protein strategy, or it might be your health and nutrition strategy. Or whatever. So do that. Spend a bit of time talking about the context. So we always obsess with companies' performance. Some of the value creation comes out of companies' performance, but almost always it's about how a company is reacting to an outside changing environment. So if there are food labeling rules coming in, then companies with high fat content in their products will do worse than those with low. So it's about teaching the investors about the commercial environment in which you operate. Use your 20 minutes a year with them to teach them, to explain stuff to them. So I do see companies doing this well. I see companies doing it badly, but often when we work with them, that evolution from we have 6 key stakeholders through to this is how we're going to drive value, and this is how we're responding to sustainability challenges, and this is how we're going to come out on top. That evolution is the interesting process. From the investor side, and this, I think, is a real cause for optimism amongst all of the causes for pessimism over the last few years. This is a real cause for optimism. We see more intelligent, more integrated analysis from investors about how sustainability factors affect key value drivers than we did in the past. So we will review all of the content that's produced by all of the investors, all of the on sustainability, all of their insights, etc. And we put them out to our users. And the quality, by which I mean the integration with core financial arguments, is improving week on week, month on month, year on year. So that is positive. Now, it's probably a response to the times we're in. There's no space out there for general nice to have greenery. I mean, if it doesn't help the bottom line, nobody's giving it the time of day now. So there is something really positive there. There is an investor base that is more able to receive and understand and use this information.
That's very positive, Mike. That's good for people to know that the investment fee. Yeah, I'm
positive than I'm used to being.
No, but it's also reflecting. I think it's reflecting what you're saying, the times we are living in. And if you meet the CFO and CEO and you ask them about how do they make money on sustainability, they are still sort of looking a bit puzzled when you ask that question. But on the other hand, I've seen the change, and that's why we are focusing so much on this, trying to convey this message to companies that they need to become more proactive and view their business through the lenses where the value creation is one of the cornerstones of what the message is to the markets and, as you say, different groups of investors. Now, Mike, what do you think? Where are we going from here? I mean, you've been in the space for a long time, another topic, but there is a backlash, and as you said, there are so many punches being thrown against sustainability and ESG. So, where do you think this is going?
Well, this is the famous thing you never want to be caught on a mic saying, isn't it? But here we go.
No, go ahead. Go ahead.
So there's still a buy side analyst out there that touts a recommendation. It's still got a slide of a recommendation I highlighted as to where sustainability was going to drive a company's stock price on the up and up and up and up and up, and the company has since had nothing but trouble. So yeah, I've been cautious there. But if we've learned anything, we as both companies and investors know that in 2026 we're going to be cost constrained. Nobody's throwing extra money at sustainability for the year. So we have to be super efficient and we have to be super disciplined. And from companies' point of view, that means a timetable. So don't respond to investors all the way through the year. Get your report out, go and talk to them all, then tell them that's it. We don't need to, unless we crash something or invent a cure for something, go away. We'll see you again in a year's time. So discipline, focus on the financial messages. We're going to have to be private in our conversations. Expansive public commitments are going to be politically difficult. Nobody wants to see their CEO in front of the newspapers or the politicians. So we're going to have to prioritize this private investor communications channel. We are, as you say, Sasha, going to have to deliver a better line of sight to value creation. So companies are going to have to put value creation and the line of sight between sustainability and valuation central to their message. But we are also going to have to deliver a better line of sight to sustainability impact. So while we say there is backlash and therefore we have to go to value creation, it is also true that there are other people kicking back against the backlash and saying, no, we fundamentally believe in this. And you can see this from, what's the way some sort of European investors with public service mandates are responding. So we're going to have to deliver companies and investors alike better line of sight to value creation, but also better and clearer line of sight to sustainability impact. I don't think this is so hard to achieve. I think it does mean we're going to have to be more disciplined about stripping out the nonsense, the maybes, the wouldn't it be nice ifs, and focus on those two core things. But nobody really disagrees with that. I mean, fundamentally, this is efficiency, which is good for the planet and profitability, and nobody's going to mind losing a few sort of peripheral items if that's the case. Does that count as tangible enough where we're going?
You're so nice, Mike. You're so nice. I mean, yeah, it does. And what do you think, James?
Yeah, no, I think it's very true that, that discipline is going to be very important. People who work within sustainability in companies are very much on the back foot on a budget level, apart from any resources, as you mentioned. But I think that's the argument. I think if there's one thing I'd add, it's like that argument about the business impact of sustainability has to be won first internally. And I think a lot of people are struggling with that, and they've lost credibility. We had an event last month in Milan with lots of companies talking about this, and they were saying, yeah, we'd love to go out and tell our value creation story, but first, people hate us inside the company, because we've dragged them through this reporting nightmare called CSRD. A lot of the larger listed companies in Europe, and it was based on this sort of European promise that this is going to be kind of the new way to see sustainability, and if only everyone does this, then it'll be somehow a perfect world. And it's obviously not, and it's fallen flat. So I think that kind of a mentality of showing the value creation opportunity within the business going forward is key to winning back that credibility internally, honing your story, building alliances with the people that actually matter from a commercial point and financial point of view within the company, rather than the reporting nerds that necessarily have to be there. And as you say, have that discipline to say, then I think you have that more strength to go out and tell that story externally. So I think it's a moment also internally.
So sorry, I don't want to come across overly optimistic, because I'm sure something will appear in the news later which will dent this. But the good news is that this is so cheap and effectively free. Because, yeah, you're right. For years, companies and colleagues inside the business have said, "Oh, we've got to do this reporting, and we need these data sets, and they need to be comparable, or we need to adjust us, create systems to generate it, etc." And you're right; it's been a promise that hasn't delivered. However, the only phase forward is to go back to that colleague and say, "Listen, Sam from Vanguard wants this information because they want to put us in their fund." Or Roger from Lion Trust needs this story, or James from T. Rowe Price wants to hear about the work you're doing in this, because they can then put it in front of a client as a case study of good practice. Now, in order to do that, costs nothing. It costs the time it takes to put a PowerPoint presentation together, to convince an IR team that it's okay, that it's allowable to have a conversation with Sam, Roger, etc., and then to spend the time having that conversation. Nothing needs to be printed, nothing needs to be designed. It's just a question of talking to people on the other side. The thing is, it's also synergistic with all the work you're already doing. It's not like company sustainability reporting has dropped to zero. I mean, you're already producing this information. You're already creating these stories. It's just about capturing the value of them through a different channel.
Right.
And in a channel which is totally investor consistent.
I completely agree with you, Mike. As an investor, I completely see that point. But it's also, sometimes I get this feeling that companies don't even want, it's like they don't want to make money on this, because they don't see it as that. They just see it as a compliance sort of a thing. And when you ask them about that, they're like, "So, what? Everything is there. We already have everything." And we get these fantastic scores from third-party providers, MSCI, whoever. And we are happy with that. You understand what I mean? So it's on the companies. Sometimes, we've been touching upon this. Sometimes it feels also that companies would need a lot of more education and practice how to do this, because I don't think sustainability professionals working these organizations actually either have a mandate or, knowledge enough to do that.
So I'm going to point you back, if I may, to, again, work that the World Business Council for Sustainable Development has done, and which they've commissioned a lot of it from us on this, because they've commissioned it. Their members have paid for it. They have a membership. They've commissioned it, so it's therefore in the public domain and it's free. And there is work there around how to organise a roadshow, how to shape a sustainable equity story, how investors integrate sustainability factors into valuation. The piece I referred to earlier is on how investors actually use sustainability information. So yes, you're right. There's a lot of there is capacity building needed inside companies, but the tools are out there, and I'm always delighted to talk. Any company that is thinking, particularly now, which is like to say, if they want to do it now, I'm delighted to talk to listed companies who say, we've done our report, we're doing our report, but we want investors to read it. Which investors should they be? How should we be shaping it? I'd be delighted to have a 15-minute conversation with them. It's not difficult, and it's all free. So yes, there is a capacity gap, but there are also all of the tools to fit that capacity gap. And I keep coming back to now, because, I mean, James will know this much better than me, but I think James, I should allow you to talk through the timetable that so many companies are on for their year-end sustainability reporting. My understanding, this is the time they should be starting to think about who their investor targets are, because the reporting is in place and then it will be published, and you want to be out to distribute to investors and talk to investors, straight after that. You don't want to get, certainly not in my opinion, you want to publish the report and then think, right, now, how do we target investors? Who do we need to be reaching it to? Because by the time you do that, it's the summer holidays and, they never see that report. So James, where are we from your perspective in the reporting timetable for companies? And am I right in thinking now is when they need to be thinking about investors?
Yeah, no, but it's not just now it's time to be thinking about investors, because obviously now is the time that companies are preparing for their reporting and they're doing materiality exercises. But sometimes it's very anodyne, it's very compliance based. Sustainability people have shifted within the organization very often. They're in finance, with answering to people who don't have a particular history of dealing with sustainability information. And so they see it just like, tell me what the data points we need. And I think what's key is to think about the different audiences now. Like, who do I need to reach? Who is going to not read the report, but read the messages that I'm going to develop out of it? So what do I need to build into that? Maybe I don't have the data points to hand now, or I don't have the right stories, as you said, to go to the different parts of the organization. So it's kind of setting an agenda already, like a communications agenda, say, yeah, if I just tick the boxes, then when I go and talk to investors, I don't have the right material information and story to pitch to them. So now is that key? And also, we often very much ask our clients at this time of year to prioritize, like to say, okay, well, who do you really need to reach out with your report, rather than say, I need to talk to everyone? Like, who's the one or two? Obviously, investors are up there. Very often it's customers. And obviously, a customer's not going to read a full, report. They probably won't even read the executive summary. And so how do you reach those people? What kind of content do you need? What kind of data points and facts and evidence to back that up, to make your case, to bring them on board? So I think now is the time, not just to say, oh, well, how am I going to take it out? But actually, what do I need? What are the key ingredients I need to put into the mix now? Because then it'll be too late and you lose another year in the cycle.
And to add to that, it's also another dimension is who am I targeting with the information that I produce? As you said, James, I mean, if you look at on the other side, and Mike, this is outside, so the investor domain, it's more client customer, angle. I mean, if you look at these reports, they don't actually talk to clients and customers who are dependent on making commercial decision, investments, or buying their products and services, which is very, very funny. Because when you look at the way how the message is conveyed, yes, investors are there as a group, but clients and customers are usually, a peripheral group of people that companies talking to regarding the value propositions they have on the sustainability side. For me, it's a quite sort of a enigma how they think that clients and customers will be able to pay for the added service or increased performance due to energy efficiency or whatever, if they actually don't understand that. And I was amusing myself trying to find any client customer educational module on any of the big Swedish and Japanese sort of listed equities websites, and I found none. So it's for me, it's quite of a interesting enigma. Yeah.
I agree with you about the customer. They say it's not my space. I would say is, James, is when you encounter companies, if they do say investors, just push them that stage further. Say, yeah, which ones in particular, which individuals? Because the reality of investors, if you look at it, most companies' shareholder bases, you're actually communicating to 20, 30 people by the time you've
between
held an analyst.
10 and 20. Yeah, you're right.
Well, 10 and 20 investors. I mean, the thing is, if you break it down, you say, well, look, 10 or 20 investors, then maybe two-thirds of those have got a sustainability interest. So that, it takes you down to sort of 12, 13. Then you've got to make sure you've identified the right analysts at MSCI and Sustainalytics and MSCI. Then you've got to identify a few analysts at each of the sustainability analysts at the sell-side brokers. But the absolute maximum number of influential people that are going to affect your share price that you're communicating to in the investor community is 30, 40. It makes you wonder why a report. I mean, if I want to communicate to 12 people, I go to the pub. If I want to communicate to 40 people, you find a big cafe or online, but I wouldn't send, think about it, a little close group of friends. You've probably got, your closest friends, maybe you've got between 20 and 40. I mean, you don't write them a report every year. So I suppose some people do, don't they? They send Christmas card circulars, but I mean that's the sort of, but for those friends not to read. So it's a slightly, for a communications process that fundamentally is made by individuals, we have developed a slightly overweighty. There's one more thing I wanted to mention actually, because I think you talked about incentives and and compliance as an incentive. I think you're absolutely right, Sasha, about that being some companies' attitudes. We published one more report recently called Show Me the Sustainable Money, which is listing of the sustainable investment funds, the funds that are going to buy according to companies' exposure to sustainable themes or to sustainable transitions. And, a lot of the big names are in there. And that, for me, regulation, you've got to do regulation. It's the nature of the beast, etc. But for me, that's where the motivation comes from. That's where the energy comes from. I want my company to expand its access to capital by being held within the ABC Capital Sustainable Futures Fund or the DEF Asset Management Sustainable Opportunities Fund. So that kind of motivation of an access to capital, I think, creates the alignment that James was looking for between the objectives of a sustainability team and the objectives of an investor relations team. James, I will leave it to you and your expertise how those sustainability departments align with other departments in the business.
Yeah, of course. No, this has been very, very interesting to have your reflections and thoughts on this. And I really take away this, the focus on specific people, like really buttoning it down to saying, how do I reach out and convince and then hone my message to persuade these people and really make it very down to earth. And real, that it's not just like pumping out a report with so many data points. So that's really very good to have your expertise and your experience over all these years. If you've seen so many companies getting it wrong, so many companies getting it right. So I think this is very practical, on the ground recommendation and advice, which is going to be very precious. So thanks a lot for all of those insights and suggestions. We had lots, so we could write it down, and there's lots of practical takeaways there for it. So that's been very, very good from my point of view. Sasha?
Brilliant, Mike. Thank you very much for the insights, time, experience, and of course, I mean, for everybody listening, you can find information about what Mike is doing in SRI Connect. Mike, all the best with your future work, and we'll stay in touch, and hopefully we can get some more people to actually listen to what you're saying in terms of individual personal context and actually conveying something, pushing the sort of an envelope a bit further, longer in terms of what companies can achieve by talking directly to investors. Many thanks, Mike.
Thank you very much.